Hello, good evening. You're watching News9. I'm Shwetha Kothari. We're bringing you stories from the world of business, policy and economy. With me, Suyash Maheshwari here in the News9 studio. Hi, good evening, Suyash. Not a very great day for markets yet again. A bloodbath of sorts that we're witnessing. Percentage and a half down yesterday, almost 0.8% down today. It's a hard time for a lot of retail investors.
That's right, Shwetha. It has been rough for retail investors for a while. In fact, Nifty is on a 5-day losing streak. Now, the market opened on a positive note today. But, by mid-morning, selling pressure once again took over control of the streets. And once the Nifty and Sensex both slipped below that flat line, selling intensified and it took Nifty to a low of 19,074. Now, the index did manage to recover some of its losses in the afternoon session and climbed above the 19,100 level, with the last tick for Nifty coming in at 19,122 mark. Now, the broader market, Shwetha, saw a good bit of recovery in the second half. They opened lower than the headliners at in the first half. However, by afternoon trade, we witnessed some sort of a buying action in mid caps and small caps, and as a result, Nifty mid cap 100 was down about 0.65% below the 39,000 levels, and the Nifty small cap 100 was down 0.24% at 12,433 mark. We also saw a spike in volatility today. India VIX jumped by 3.7% and ended today's session at 11.31 levels. Now, as I said, with today's fall, Nifty is now on a 5-day losing streak. In the same time, Shwetha, Nifty has corrected by about 3.5%. Nifty mid cap, on the other hand, has corrected by about 5%. And I'm looking at the Nifty small cap 100, which, by the way, had hit an all-time high levels on October 18th, the day when the market crash started. It also is down about 5% in the last 5 sessions or so. Now, what led to today's fall? There are 3 factors.
Yes.
First, it's the global markets. Now, US stocks ended on a positive note in yesterday's session. However, futures today, the Nasdaq futures today were trading under pressure, and it indicates a muted start for the US markets. Now, this is on the back of muted earnings from Google's parent Alphabet as well as Microsoft. Now, as the last time I checked, contracts on Nasdaq sink as much as 0.8%, whereas future contracts of S&P 500 were down about 0.5%. Another factor was a little bit of a bounce back in 10-year US yields. The last time we were talking about US yields, they had touched that 5% mark. But over the last 2 days, we saw some bit of a dip, whereas US 10-year bond yields had settled at around 4.8 levels. But today we saw a bit of a jump by about 6 basis points, and that is also creating fears in the market. Another factor is the crash that we are witnessing in the financial and the IT pack. Now, financials and IT constitute about half of Nifty's entire weightage. So, a drag on them is a drag on the entire market.
Absolutely.
So, that led to a good bit of a fall across the markets. Now, if you ask about sectors, as I said, financials and the IT were the worst performers. Nifty Bank was down about 0.74% in today's trade. Nifty Financial Services was down about 0.93%. Nifty Private Bank was down almost 1%. But PSU Bank, Shwetha, outperformed the market and ended in the green, up about 0.17%. Another gainer in today's session was the Nifty Metal Pack. Apart from PSU Bank, it was a sole gainer. The Nifty Metal Pack, which was up about 0.5% to 1% throughout the day, settled around 0.15% higher. Now, what led to the surge in metal stocks? It was reports from China that suggest, perhaps a stimulus package could be in the pipeline. Now, according to reports, China is planning to issue a 1 trillion yuan in government bonds to support economy, with a focus on infrastructure as well as disaster relief. Now, China, as we know, is one of the biggest consumers of metal around the world. So, once a demand picks up there,
the demand for metal is likely to pick up.
So, that's why we are seeing a good bit of a run-up over there.
And what's happening here with PSU banks? Why is it an outlier today?
I think it's a bit of a catch-up rally, because we have seen PSU banks turn into underperformers in the last couple of weeks. But the results also, Shwetha, they are coming out well. Banks have shown resilience. NIMs, which were expected to contract, have not contracted as much for these smaller PSU banks. Also, what's helping them is the growth in deposits. they are now competing with private banks for deposit growth, which is, giving a boost to their earnings.
All right, so the results have augured well for PSU banks. Amit Gupta of Fintech Capital joining us on the show at this point. Mr. Gupta, thank you so much for taking time out, sir. It's a difficult day as we started for a lot of people as bears are tightening their grip on Indian markets. What is dragging down Indian markets in your assessment? Is it just a rub-off impact of what's happening globally? Are the macros still looking healthy and strong?
Hi, good evening, Shwetha and Suyash. Uh, so I think in general there have been a lot of bad news which was there in the market for the past couple of months. It's just that market was surviving that barrage of bad news and stayed calm in that sort of period where the volatility was there, but it was sort of on the lower side. So some of the events, which has been, according to me, negative to the markets, the indices haven't really sort of reacted to them sufficiently. So whether it is hawkish commentary coming from the central bankers, including the RBI and the Fed, or whether it is downgrade of the global growth estimates, or even the Q2 earnings and the poor growth guidance by the IT services company. Now we had this hostility between Israel and Palestine. Then you have the rise in the global crude prices. There are opinion polls which says that the incumbent government could actually lose some of the states in the forthcoming elections. I think a lot of the news was sort of holding up the markets. But now, when we have seen sort of a breakdown on the indices, technical breakdowns, we are seeing the selling actually getting accelerated in the market. So my sense is this may just continue for some more time till the bond yields are up, both in the US and in India. We have performed in line with the global market so far, but that could change
So
going
would it be
forward.
right to say, Mr. Gupta, that apart from FII sell-offs, DIIs are also selling off? Retail investors are wary, are jittery at the moment, and do they have a cause to be jittery at the moment?
No, I don't think, I mean, we have got to the point where retailers started getting jittery. They may not add to the, their current position, but I don't think there is a sort of a redemption kind of a scenario as far as such. We have seen in the past also that, the first 5% sort of a fall, nobody really exits. It's only when the fall accelerates to 10% to 15%, then we start seeing them pulling off the money. I don't think we have got to that point. Apart from the FIs and the DIs, which have been actually on Monday, the data was actually positive for both FIs and DIs. Today we'll see, how is the data. But we have also have to understand that there is a lot of money now outside the FI and the DI data also. We have a 10 lakh crore PMS industry now. The AIF industry is about 3 4 lakh crores. uh, then there is a lot of retail participation without mutual funds also. There is a direct investing which is happening from the retail side. So my sense is there has been some cautiousness there in those segments, and they have been sort of booking profits or at least trailing their positions with stop loss. And with the technical breakdowns, now that selling has been accelerated. I don't think that the mutual fund redemptions are at a place in the current market, but if the market fall further, then we might see even selling happening there as well.
All right, and what are the near-term support levels for Nifty now that it's hovering near the 19,000, almost 19,100 mark, come to think of it?
Yeah, my sense is that markets are weakened on the daily and weekly time frames. We are seeing sell signals almost all the momentum indicators for the key indices. So I think the 20 week or 21 week moving average, which is about closer to 18,900, 950, that should be the first support. And we'll see, how that how markets hold up at that support level. If that goes away, then we are looking at another 5 to 7% fall, which can take us deeply into 18,200 kind of a levels. But the first support should be around 18,950.
All right, 18,950. Suyash, that is the near-term support level for Nifty at this point. That is what Amit is saying. Amit, stay with us. We continue to track, the macro developments here very, very closely. Tech Mahindra has come out with its Q2 FY24 results. How are the results looking like?
Shwetha, the numbers are not looking that good for Tech Mahindra. I think it has missed estimates on both profitability as well as revenue front. Now, revenue on a quarter-on-quarter basis grew about 2.2%, about 2.2 to 2.4%. It came in at around 12,864 crores in the quarter gone by, whereas in Q1 of FY24, it stood at 13,159. Now, we had expected, revenue to come in at around 13,113 crore rupees. So it's about a 2% miss from our estimates. Profit, on the other hand, dropped by about almost 29%, Shwetha. It came in at 494 crores versus our expectations of about 693 crores. We had expected profit to stay flat on a quarter-on-quarter basis. Now, margins also came under pressure. We had expected a decline of about 100 to 150 basis points. Margins, EBIT margins for Tech Mahindra stood at about 4.7% in the September quarter versus 6.8% in the in Q1 of FY24. So overall, Shwetha, the numbers are not looking that great for Tech Mahindra. Of course, we'll be keeping a track of what the management has to say about that 210 basis points margin miss and a profit decline of nearly 29%. But I'm also looking at the stock, Shwetha. Tech Mahindra, in the last 1 month has corrected by about 12% or so. In fact, even today, ahead of the results, the stock was down about 1.4%.
Okay, so maybe the subdued results were in line with expectation, but to what extent? Let's get Amit on that. Amit, I think the street was expecting subdued results, and that is the commentary coming in from overall IT sector for that point. Are these results in line with expectations or even lower than the lower expectations the street had?
No, I think all the IT services company, whether versus TCS, HCL, Wipro, which have already declared results, except the order books of all these IT services company on all other parameters, none have been very good. And I think Tech Mahindra result is in sort of line with that kind of expectations. Already it was lowered, so it is, in line with the lower expectation, except on 1 or 2 parameters. But obviously the numbers are disappointing, and the growth may not come as fast as people would like to have. Also, Tech Mahindra is undergoing a transformation. They were very high on the ML growth. Probably there is a shift in the management currently. So there could be a shift from that high ML growth, which has been margin dilutive in the recent past. So that would again mean that we will see numbers in the future as well, subpar, or the growth will be a little subpar. So I don't think we'll see an outperformance on Tech Mahindra in the next 3 to 6 months as compared to the, let's say, Nifty IT index. So one need to watch out for what is their future plan of action, given that they have a new CEO.
Right, so new CEO, management commentary would be keenly eyed on. What is the future course of action? Tech Mahindra, just reflecting on the sentiments that the IT pack has been reflecting on. Many calling it a washout here. From the numbers trickling in, it just might be a washout here.
That's what I was getting to, Shwetha. In fact, if you look at results of now, all, I think 5 or 6 top companies have reported their results. We have seen one trend. Revenue has fallen, except for Tech Mahindra. Profitability has improved because company has improved operational efficiencies. But now what we are seeing is that guidance coming from the management. So far we don't have the guidance from Tech Mahindra management, but the guidance coming from other companies such as your HCL Tech, such as your Infosys, is that there will be weakness for the next couple of quarters. And in fact, even the deals that they have won, these are longer duration contracts, and it will take some time for these deal wins to convert into actual revenue for the company. So perhaps it looks like FY24 is indeed going to be a difficult year for Indian IT companies.
All right, and Amit, before we move on, majority of bellwether IT companies have already declared their results. Tech Mahindra and a couple of others have also come out with their results. I'm not sure how many companies we're still waiting results for, but so far the trend line is emerging clearly, which is revenue has taken a hit in the second quarter of this financial year. Are you seeing trend to continue for onto other quarters as well? Where does it end?
And what's your broad outlook on FY24? I mean, it looks like a difficult year for the IT companies.
Yeah, I think the commentary which came out last quarter itself, Q1, the Q1 results came out, it was quite clear that it's going to be a tough year. Some sort of wanted to give a little bit of benefit of doubt because in Q1 there was a lot of impact about these small banks which have gone bust in US. But as we have moved forward 3 months now, the financial conditions in US is quite deteriorating quite fast. So even if we evaluate the present conditions in the US market, then a sharp correction is expected in a lot of asset prices. Apart from that, even the China, I mean, even the European markets look quite jittery. So under that circumstances, the growth in the IT services company looks a little difficult to come by, at least in FY24. So if one has to take a call for investing into the IT companies, it has to be from FY25 and 26 perspective. Also, it is very clear uh, from their jobs pattern that they are not looking to aggressively ramp up their operations. There is going to be 2 lakh less people employed in the current financial year.
Right.
Many of these IT services company haven't really gone into the campus placements as well. So that sort of gives you an indication that there is work currently, but they are not expecting acceleration or ramp up in those projects in the near term. So they
Right.
have postponed
Amit,
the.
while we speak, Axis Bank has also come out with its quarter two earnings. Let's get in Suyash to quickly run us through the numbers.
Shwetha, Axis Bank has posted a good set of numbers. Both profit figures and NII has meet the street
met the demand?
expectations. Profit figures stood at about 5,863.6 crores versus 5,329 crores in the year ago period. So it's about a 10% jump. We had expected a figure of 5,733 crores. So from our estimates, profit figure is up about 2.3%.
Okay.
Now, net interest income surged to 12,315 crores versus 10,360 crores in the year gone by. So that's about a 18.9% jump on a year-on-year basis. We had expected NII to come in at 11,957 crores. So about a 3%, about 3% higher than what we had expected. And I'm looking at the stock of Axis Bank as well. The Axis Bank stock was doing all right in the morning trade. However, it closed down about 0.77% amid bearish trend that prevailed in the banking and the financial pack. Axis Bank actually ended about it slightly underperformed the Nifty banking pack. Nifty Bank was down about 0.74%, whereas Axis Bank ended today's session down about 0.77%.
All right, those of course are numbers on your screen at this point in time. Axis Bank Q2 earnings are out. Amit, are these numbers in line with the expectations?
Actually, the numbers are slightly better than expectations, driven by the net interest income growth or even the NIM expansion, higher, etc. Obviously that's a testament to a very strong performance. There is a healthy loan growth as well, as I can see it. They are expanding the lending portfolio and so sort of servicing other sectors also very efficiently. The deposits have increased, the credit costs have sort of seen a reduction, but the asset quality has improved in the terms of NPAs, the gross NPAs and the net NPAs both. So I think overall, given the liquidity buffers they've declared and the digital partnerships, the numbers seems to be a slightly ahead of the expectations.
All right, Axis Bank numbers slightly ahead of expectations. Perhaps stock impact will only be visible tomorrow. We will keep a close watch on that. But let's also quickly take a look at some of the top gainers and losers stock in action this afternoon.
Yes, Shweta. So among the gainers in blue chip stocks was Coal India. It ended about 1.08% higher, ended its 4-day losing streak. Metal stocks also, two of the metal stocks featured in the list of Nifty gainers, Tata Steel and Hindalco, ended about 1.08% and 0.83% higher. Now, as we know, this is on the back of that talks of a stimulus package back in China. Tata Consumers ended about 0.67% higher, and SBI also ended today's session in the green, up about 0.66%. Now, among losers, Shweta, the top loser in today's trade was Apollo Hospitals. Apollo Hospitals was down by about 2.4% in today's trade. Another stock which was down and featured in the list of top Nifty losers was Adani Enterprises. The stock is on a 8-day losing streak, and in fact it was down about 2% today, and with that, in the last 8 days, it has wiped off 10% of investors' wealth in the share. SBI Life was another loser. It dropped about 2.05%. Cipla, another pharma stock to feature in the list of top losers, was down about 1.9%. And Eicher Motors dropped about 1.74%.
All right. And before we move on, Adani stocks were in news this afternoon.
Yes, Shweta. So, I mean, looking back on January 24th, when
The
Hindenburg came out with its damning report, one of the things that the short seller said is that, Adani group of stocks, the 10 listed entities, are overpriced, and they are overpriced by as much as 85%. So, essentially, Hindenburg said that they expect the stock to correct by about 85%.
Which is what has happened.
Over the next year or so. I mean, it has happened partially because
Partially
Adani
a result of maybe the report itself.
Yeah, I mean, Adani Total Gas is the first to hit that target price, which Hindenburg had laid out for us. The stock is down about 85.27%. Now, these are from January 24th to October 23. These levels, the stock dropped by about 85%. Other major losers, Shweta, as you can see on the screen, are Adani Green. It's down about by 54%. Adani Energy down by about 68%, so it's getting there. NDTV is down about 30%. Adani Enterprises almost down 33%, and as I said, about 8 to 10% of that fall has come in the last 10 days. There are only two stocks that have since gained, after the Hindenburg report came out, only two stocks have outperformed, namely Adani Power, which is up about 15% in the 9 months or so, and Adani Ports, which is up about 1.4%.
All right, those of course are Adani Group stocks of all 10 listed entities of Adani Group. Many of them down by as much as 50%. At least 4 stocks that I can see on my screen at this point are down over 40%. That is on the backdrop of a damning Hindenburg report, from which Adani has not been given a clean sheet by SEBI just as yet. So an important report there awaited as far as SEBI is concerned. I think we'll have to end it at that. Amit, thank you very much for taking time out. Thank you for joining us here on Newsline. Always a pleasure, sir, speaking to you.
Thank you for having me.